traditional health insurance behind. Take charge of your healthcare with Christian Healthcare Ministries. CHM offers you flexibility. Enroll anytime. Choose your own provider. And the original faith-based way of your medical bill costs. Learn more at chministries.org/faithfi.
If we lose this cultural war, we're going to have a hedonistic, humanistic society.
Discover the story of the culture warrior Don Wyman and how he went head-to-head with Hollywood, Playboy, the homosexual agenda, and the Disney empire. The movement Don started paved the way for Christians to boldly stand for truth and righteousness in a hostile culture. Watch Culture Warrior today for free. Visit culturewarrior.movie.
We're grateful for support from Eventide Investments on the Faith and Finance program. Eventide's approach to values-based investing is grounded in the belief that humankind was created in the image of God, with intrinsic dignity, value, and worth. Eventide calls this investing that makes the world rejoice. More information is available at eventideinvestments.com. That's eventideinvestments.com.
If you believe in the work of the American Family Association and you want to ensure that it continues for generations, consider including a gift in your will or trust. It's one of the most popular and effective ways to give. You'd simply connect with one of your advisors who would help you include language in your will or trust to include a specific gift to the American Family Association. If you'd like to learn more or connect with an advisor who can help you with that, just go to afafoundation.net.
As the leading advocate for the Christian financial industry, Kingdom Advisors serves the public by promoting the integration of a biblical worldview across every aspect of the financial services industry. And we serve a growing network of thousands of Christian financial professionals, equipping and empowering them to carry biblical financial wisdom to their clients, peers, and community. For more information, visit kingdomadvisors.com. That's kingdomadvisors.com.
Glad to have you with us today on Faith and Finance here on American Family Radio. I'm Rob West. Looking forward to taking your calls and questions today, but grateful for my friend Jonathan. Delighted he was able to join us today as we prepare for Father's Day, to celebrate dads and to recognize that each of us as dads are on a journey and about surrendering to God's purposes and finding our identity in Christ, and then leaning into this incredible blessing that God has given us to be fathers. Now we want to turn the corner and tackle what's going on in your financial life today, and recognizing you're a steward. Anyone who's listening to this program is managing whatever resources God has entrusted to you or to me. It all belongs to Him. We want to be found faithful, not only in fatherhood, but in money management and stewardship. And so together each day we do that on this program, and the only thing left is for you to call. Here's the number, 800-525-7000. That's 800-525-7000. We would love to dive into whatever questions you have in your financial life today. The topics are yours, so we can talk about debt repayment, we can talk about giving, we can talk about budgeting and spending plans, perhaps investing for the future, especially today in light of the market selling off. And that's where we'll begin today before we head to the phones. Again, that number, this is the time to call, 800-525-7000 with any financial question. But in the news, as you might expect, markets took a slide this morning after the opening bell as investors reacted to Israel's overnight airstrikes on Iran. Reports have Israeli jets taking out key command and control facilities there in Tehran, as well as several nuclear processing sites around the country, and those attacks are expected to continue today. Not hit, at least so far, are Iran's oil production and refining facilities, which could be putting a brake on the market slide this morning. So far, the S&P 500 is down just over 60 points, off about 1%. And the Dow Jones down about 660 points, off about 1.5%. The NASDAQ down 1 1/3% off 260 points. We'll continue to watch it through the day, and Jerry Boyer stops by in our final segment along with Walker Wildman. We'll get Jerry's reading on the markets and the economy and what he expects to be the fallout of all of this. That's in our final segment today. But let's head to the phones. If you have a question, go ahead and call right now. The calls are coming in, but at least at this moment, Pat is standing by and we've got some lines open. So if you have a question today, now's the time to get in the queue. 800-525-7000 is the number to call. Let's begin in Wisconsin today. Hi, Ethel. How can I serve you?
Hi, Mr. West. I have a question about a quick claim deed I have in place since 2011. My understanding was I have 3 children. After their father died, then I had this done. And my understanding was that we all each own it. One of us cannot sell without the signatures of the others. So I thought that when I go to heaven, it just belonged to them, and I would have to do nothing. I heard you speak to a lady about quitclaim deed and something like a transfer of death form, and so I need some clarification so that sometimes I think I should just sell the house before I die, so it would be easier for them. I don't want to leave them something that they're going to have to pay a lot of money on. You know what I'm saying?
Yes, ma'am. I certainly do. Let me just answer specifically those 2 questions, and then we'll talk about just generally the idea of transferring ownership by way of a quitclaim deed to heirs. So if you've added your kids to the title using a quitclaim deed, now you all together legally own the property. So yes, everyone listed would have to sign off on a sale or even a refinance. And then when you pass, your portion doesn't go through the probate. Typically, it would automatically belong to the surviving owners if it's titled joint tenancy with right of survivorship. The better option typically is to not do the quitclaim deed and to do something called a transfer on death deed. And here's why. With the quitclaim deed, the heirs, your children, have inherited your cost basis, which just simply means if they sell it, they'll have to pay the capital gains, that is the gain or the increase in value of the property. That's the difference between what they ultimately sell it for, let's say after you pass away, the difference between that selling price and your original purchase price, which is probably quite a bit lower. And then the difference between that amount is considered the capital gain, and then they would likely pay capital gain taxes on it. If instead they inherit the property after your death, meaning they don't have legal ownership of it now, but they inherit it by way of either a transfer on death deed or a revocable trust, well then they're going to get what's called a step up in basis. That means that the new basis will be the property's fair market value as of the date of death. That just simply means if they were to sell it in a relatively short period of time after your passing, there would probably not be any gain, because the difference between the market values at the date of death and the selling price would be, negligible, if any. And so they would not have any taxes that would be owed. And so the 2 instruments that are typically used for that purpose, if you're wanting to pass it efficiently outside of probate so they don't have to wait for the probate court to get involved, is again called a transfer on death deed, not a quitclaim deed. So that just means that the property is immediately going to go to your heirs with that step up in basis, and the triggering event would be your death. It would take effect only upon death, but it would bypass probate. The second option, which is going to be a little more costly to you now, would be to put a revocable trust in place. So that would, if you went that route, it would involve them essentially returning full ownership to you by way of another quitclaim deed, which would be considered a gift. And then you could put the TOD, the transfer on death deed, in place, or the trust, to allow them to get the step up in basis to save capital gains taxes, but also to avoid probate and make sure they get the property quickly and efficiently after death. Now, I'm sure you have questions, so let's follow up on that right after this break. Ethel, stay right there. We'll be right back. Faith and Finance is underwritten by certified Kingdom advisor Kevin Bruce with Align Investment Research, helping families across Collin County honor God by stewarding wealth with wisdom and purpose. Because true peace of mind comes from aligning wealth with God's design. Learn more at align7.com or call 972-972-8465. 972-972-8465. Align is a registered investment advisor.
While we rejoice that Roe was overturned, the pro-choicers are very energized. They are winning the arguments and elections. We need to win them back. The people who bring you Wretched Radio have produced a powerful, persuasive, and proactive 13-lesson video series to help.
You don't need a PhD to tell you that human life is more valuable than the life of the ants.
Order Life is Best at shop.wretched.org. And listen to Wretched Radio Saturday nights at 10 Central on American Family Radio.
Faith and Finance is grateful for support from Sound Mind Investing. If you have money in an investment account, you know sometimes the stock market can seem like a roller coaster. But it's possible to enjoy both profit and peace of mind as a do-it-yourself investor, no matter what's happening in the market. A short video webinar about that is available at soundmindinvesting.org. Financial wisdom for living well. soundmindinvesting.org. Right now, more people than ever are looking for biblical wisdom to navigate their finances, and you can help meet that need. When you become a FaithFi partner, you're equipping believers to trust God, steward His resources well, and live with kingdom purpose. Partners receive early access to our newest resources, our quarterly Faithful Steward magazine, and the pro version of the FaithFi app. Become a FaithFi partner with your gift of $35 a month or $400 a year at faithfi.com/partner.
At Wesley Biblical Seminary, we believe God is raising up a movement across our nation and around the world who hold fast to the inerrancy of Scripture and the hope of holiness. We do this through bachelor's, master's, and doctoral degrees, certificate programs, and even training for lay people. So whatever your next step is in being equipped for ministry, we're here for you. And if you believe these are the kind of pastors we need leading churches in the future, we invite you to think about giving to Wesley Biblical Seminary. Learn more about us at wbs.edu.
Feeling burdened by credit card debt? As faithful stewards, we are called to manage our finances wisely. Christian credit counselors can help with a debt management program that allows you to pay off debt up to 80% faster, while honoring your commitments with integrity. Don't let debt hold you back from the life God has planned for you. Take the first step toward peace and financial freedom today. Visit ChristianCreditCounselors.org. That's ChristianCreditCounselors.org.
This is American Family Radio, a listener-supported ministry of the American Family Association.
Great to have you with us today on Faith and Finance here on American Family Radio. Coming up in our next segment today, Jerry Boyer and Walker Wildman stop by. We'll get Jerry's take on the markets. The market selling off, at least at the open, as a result of the Israel striking Iran. Oil prices are spiking, despite the fact that, at least to this point, they've stayed away from the oil refineries and the attacks. But just the unrest there in the Middle East is causing the U.S. markets to sell off. We'll get Jerry's take on that straight ahead. In the meantime, before the break, we were talking to Ethel in Wisconsin. Ethel, I shared with you why usually it's not the best idea to use a quitclaim deed. Instead, use other tools to preserve that step up in basis and save taxes upon the sale, but also to provide for the efficient transfer of the real estate upon your death, bypassing probate. Give any follow-up questions or thoughts you have.
Oh, I don't know if I have any. Let's tell me more, like how I have it right now in place for the children. When I die, then they automatically own it.
Well, they own it now because if you did a quit claim deed, you relinquished a
Yes, I
portion
understand.
of the
Yes,
ownership. Okay, so they own it now, and then your portion so let's say you own a third or a quarter, whatever it is, your portion, depending upon how the property is titled, if it is titled joint tenants with right of survivorship, then your portion would be passed to the other owners upon your death. If it's tenants in common, then your portion would pass according to your will.
今日の昼はね、ないけど、家帰ったら、昨日の納豆とサバ、ご飯が温めてあるから、それで食べてちょうだい。
With regard to what capital gains tax they will pay on the portion they receive.
The gains was say like $20,000 to $25,000 is all.
So the difference between what they would sell it for at your death and what you originally paid for it, what did you buy it for?
I don't remember, but on the information that our tax man made this up, I started to look for those papers. 38,684.
That's what you think you bought it for originally?
I think so, yes.
And what do you think it's worth today?
Like 58.
Oh, okay. Yeah, I mean, they would have to, so for a single filer, they'd have up to 47,000 in combined income before they would start to pay, capital gains. Over 40,000, they'd pay about 15% on the difference. If they're married, they'd have up to 94,000 in combined income. So they'd add up all their income, and then they'd add their portion of the gain. And then if the total of that, if they're married filing jointly, was over 94,000, then they pay 15% on that $20,000 or their portion of it. So it's not going to be a whole lot of money. So it's one thing to consider. And at this point, because you've already transferred it, if there's not going to be a whole lot owed in the way of capital gains, it may not be worth your while to try to unwind this. Because you've accomplished the purpose for which you set out, which was to make it really simple for them to take control of the property at your death, which this allows that to happen because they essentially already control it now.
Yeah, that kind of was my understanding. I've got a note on my papers that he said 13,000 each exemption. No gift tax need be filed. Yeah. So he's probably talking about the annual gift exclusion, which for 2025 has gone up. It's $19,000, but the year in which you made that, did the quit claim deed, it was lower. So it's probably that amount, whatever you said, maybe 14,000. So that allowed you to transfer, do the quit claim deed, give them each their portion, and you didn't even have to let the IRS know about it because you were below the annual gift exclusion. So you're probably in good shape. I think the only question is just whether or not you want to understand more fully whether there's going to be any capital gains, but given the limited amount of capital gain that would be there, they're probably not going to owe anything. And if they did, it'd be a fairly small amount. So I think you're in good shape. If you have further questions, I'd go back to that attorney that did it in the first place. But sounds like you're doing a great job managing all of this, Ethel. And if we can help you further along the way, don't hesitate to reach out. May the Lord bless you. Thanks for calling today. 800-525-7000 is the number to call. To Mississippi. Hi, Chris. How can I help?
Yes, good morning, Rob. This is Chris.
Yes,
I
sir.
was wondering what your opinions are on closed-end funds as a passive income stream. I've dabbled in that a little bit. Not a huge amount of money in there, but I just wanted to get your take on that.
Yeah, I think they can be very effective for folks specifically that are looking for income, and obviously that's your situation. So they offer typically higher distributions than traditional mutual funds or ETFs, and there's additional potential value because they can trade at a discount to the net asset value. But they do tend to be a little bit more risky, in the sense that, compared to the typical dividend-focused mutual fund, there is some added risk because they trade like stocks. So therefore, as I said, the price, can sell at a discount, but it also can sell at a premium based on, the actual value of the assets, whereas the mutual funds always redeem at the net asset value, the total outstanding shares, divided by the holdings. So there's never any surprises. There can also be some leverage risk because they can borrow to boost the income, which magnifies not only the gains, but also the losses. Mutual funds rarely do that. The higher payouts can include a return of capital, not just income, and that can eat into your original investment without you realizing it. And then they're more thinly traded. So there's just not as much volume, which can lead to price swings, whereas mutual funds are bought and sold directly through the fund company at the end of the day. But as long as you understand the risks, understand there's a little more volatility, it can be great because, again, they offer a higher income potential, which I know is what you're looking for. So, I'm not against them as long as you understand, what you're getting into.
Yeah, and I think that I've delved into that enough where I have a fairly good understanding of it. The return of capital, I guess I didn't. I understand that it's there for some of them. I just haven't seen how that has impacted my initial investment on it. It seems like my cost basis is still the same, even though some of the distributions involve return of capital. When I look at it in my Schwab account, it seems like the cost basis, it hasn't changed. Maybe like I thought that it would.
Yeah, it does reduce your cost basis. So when the fund is paying you back part of your original investment, not just the earnings, when you eventually sell the fund, you'll pay capital gains tax on the difference between the sale price and the adjusted cost basis. That's not automatically bad. It can be a tax efficient way to get income, but too much return of capital may signal the fund's not earning enough and erode your capital to sustain the distribution. So just understand the implications of that. But no, I think you're on the right track. Sounds like you understand what you've got. It's working for you. Thanks for your call. We'll be right back.
Faith and Finance is underwritten by certified Kingdom advisor Kevin Bruce with Align Investment Research, helping families across Collin County honor God by stewarding wealth with wisdom and purpose. Because true peace of mind comes from aligning wealth with God's design. Learn more at align7.com or call 972-972-8465. 972-972-8465. Align is a registered investment advisor.
Pay attention to, especially the country of Israel. Each week, I'll help you make sense of what's happening in that region through a biblical lens. I'll bring you important information about security threats, archaeological discoveries, biblical prophecy, ministries happening on the ground, and much more. I'm John Riley. Join me for the Middle East Report Special Edition every Saturday at 6:30 p.m. Central on American Family Radio as I connect you to the people, places, and geography of what we read in God's Word.
We're grateful for support from Guidestone, whose diversified suite of investment solutions align with Christian values to create positive change in the world. More information is available at guidestonefunds.com/faith. Investing involves risk, including potential loss of principal. Carefully consider the investment objectives, risks, charges, and expenses of Guidestone Funds before investing. They're distributed by Foresight Funds Distributors, LLC, which is not an advisory affiliate, a registered investment advisor, nor do they provide investment advice.
Jesus said, where your treasure is, there your heart will be also. Today, put your heart into something that makes an eternal impact. Heart for Lebanon is sharing the gospel and protecting girls from early marriage, child labor, and violence. Your gift of $114 helps reach 3 at-risk girls with hope and a brighter future. Give generously. Text FAITH to 98656. That's FAITH to 98656. Or visit faithfi.com/Lebanon.
So glad glad to have you with us today on Faith and Finance here on American Family Radio. I'm Rob West. Jerry Boyer and Walker Wildman are with us here in this final segment today. You know Walker well, leading here at AFA and AFR. Jerry Boyer is our resident economist. They join us each Friday with market and economic insights, along with updates on the work of AFA and corporate engagement. We'll get to the market. Obviously, the market's selling off today as a result of Israel's strikes in Iran. Oil prices are spiking. We'll get Jerry's take on all of that straight ahead. But first, let's start with corporate engagement. It's been a few weeks. Jerry, set the stage on what you and the team at AFA have been working on.
Well, we've kind of come to almost to the end of the season. AFA had a very successful season. In fact, the top vote getter in sort of our coalition of those who are, concerned about issues like religious liberty, non-discrimination on the basis of faith, sex trafficking, that sort of thing. The top vote getter that I'm aware of, and I tracked this pretty carefully, was AFA's proposal at Apple, which got almost 9%. There's been a real backlash against what we're doing, and so proposals coming from our side have actually gotten very low vote counts this year because the proxy advisory services are basically coming down on the hard left right now with their benchmark policies. So a proposal that says something like, well, we want you to talk about the risk of paying for sexual transition treatments for minors, which would be a 90% support with the American people. Yes, we want to know more about the risk of this. What are you doing? Gets 1% support in proxy voting, and that shows how completely corrupt. It's essentially a North Korea system, right? If people win elections with 55%, hey, you won an election. If you win with 99%, who's counting the votes?
Right.
So those are my two big observations. But I think the strong moral outrage over sex abuse material online was enough that it even caused some people who do not typically agree with our team to come along and say, hey, Apple, and that was AFA, and there was another one that was Meta, which was another partner, Instagram, you need to give a fuller account. So I would say those are major highlights.
Yeah, no doubt. Walker, that has to be an incredible encouragement to you and the work that you're doing, huh?
Yeah, it is encouraging, and one other encouraging thing is that we're really just getting started. I mean, this was only our second season, if you will, shareholder season, to engage with Jerry and his team on getting some of these proposals presented. So we're really just getting started, and there's a broad coalition of not just AFA, but other ministries and organizations around the country that total billions of dollars in assets and shares that are beginning to get engaged. So I think really things are just only going to improve from here. And to Jerry's point, getting that 9% at that Apple shareholder vote was a big deal. And I think we can even get more if we engage and educate other shareholders on how to vote their shares. So I think there's just a lot of upside here. And I think these corporate boardrooms are beginning to pay attention to the conservative coalition's proposals.
Yeah, wow, that's incredible. Walker, I know this particular earnings season, the shareholder meetings are coming to an end, but as you looking forward, is there anything in particular that's on the horizon that you're excited about?
Yeah, Jerry mentioned the CSAM material, the child sexual abuse material, which is illegal material, by the way, that these platforms are turning a blind eye to. Some of them are knowingly allowing it on their platforms, but refusing to take action, the reasoning of which is beyond me. But we're going to focus in on that heavily because pornography plays into this. Pornography leads to child sexual abuse material, and that's the data proves that 100%. So this effort to protect minors, to protect children, and ultimately protect everyone from this explicit pornographic obscene material, it's a very bipartisan effort and topic that many people agree on. And so I think we're going to hone in on that in the next season. And of course, we'll have other proposals as well on other topics. But protecting children seems to be a very, very, coalition type effort that many people agree with.
Yeah. Jerry, what other issues are front burner for you right now?
Well, I think we need to continue the fight on debanking. A number of banks have moved in the right direction. In fact, some of the largest banks. But there are a shocking number of regional banks, many of which have many conservative clients, maybe are disproportionately in the South or Midwest, that are still imitating the bad example of these banks from 4 or 5 years ago. We've engaged, for instance, with Truist a lot. That's a bank that has a very southern footprint. A lot of conservative Christian clients that absolutely blocked any change whatsoever, on the issue of debanking, and was frankly really misleading with the things that they said to us, said a lot of inaccurate things to us. So I think it's time to take the examples of the JP Morgan Chases or the Morgan Stanleys or whatever that have had good, positive statements. We're not going to discriminate in banking based on religious viewpoint or political viewpoint and say, okay, the rest of you need to follow the gold standard. So I think that's a big topic. There's another one that some people might not think is in that moral area, but I think it really is. There's a real confluence between the pro-abortion agenda, the anti-energy agenda, and the anti-food production agenda. There are just a lot of people who believe that 8 billion people is too many, and it ought to be a whole lot fewer people. And that tends to go together with the war on fossil fuels, which is now switching to becoming a war on agriculture. So there's been a real spike in what's called, quote, agricultural management proposals. That's what the industry calls it. They're really agricultural micromanagement, where people are trying to basically impose carbon limits or other limits. They're basically telling farmers, you don't know how to do it right. I saw a documentary. I know how farming should be done. And by the way, we're producing too much beef. We're producing too much pork. We need to eat crickets. We need to eat beyond beef. We need to eat fake meat. A lot of that agenda is coming through, and that's essentially pressuring. They don't try to pressure the farmers. The farmers are going to say no. What they do is they try to pressure like the fast food companies or the restaurants to impose this stuff, to impose, quote, sustainability. Sustainability should mean we're making enough food for people. For them, sustainability means make less food, make fewer people. And we really need to be dealing with that issue. And it's sneaky and it's very nefarious.
Yeah. Well, it's incredible, Jerry, the work that you're doing. And Walker, it really, we can't overstate how significant this is. I mean, we think about the work of AFA Action. There are tools that have been in the tool belt going all the way back to your grandfather, but this is a new one, and it's playing a pivotal role in shaping culture, isn't it?
Yeah, it truly is. And this is, as I mentioned earlier, I can't say it enough how much upside there still is yet to come here, because this coalition of like-minded organizations and individuals around the country that are beginning to actually show up at shareholder meetings is a really big deal, and it's something that the left has used for some time now. Jerry knows this very well, and so I think conservatives showing up at these meetings and voting their shares and presenting proposals, I just think there's a ton of upside here, and we're just getting started. I mean, we're like in the first inning of this movement, and so the more time that goes by, the more organized we'll be, the more we'll be able to educate your common shareholder, your average shareholder, on how to participate in meetings and have their vote heard. And so I'm just really excited about this opportunity, and I want to thank Jerry and all the other dozens of organizations out there and individuals that have decided to make this a priority.
Yeah, that's well said. Jerry, with our remaining
moment... I want to thank Walker for being first over the wall.
Yes.
Because a lot of ministries are doing it now, but there was a first.
Yes. Yeah, that's right. And the influence of AFA is massive in this space. Jerry, let's take just a moment and allow you to comment on the markets. Obviously, the Dow and S&P off today, but modestly. It sounds like, at least to this point, the oil fields haven't been hit, but, just any kind of unrest to this magnitude in the Middle East is shaking the markets. And I'd love for you just to kind of weigh in on what you're seeing.
Yeah, today's trade is all about the strike against Iran nuclear capacity, which I believe is a risk reducer in the long run, not a risk increaser. But whenever you have a military strike of this magnitude, there's going to be a certain risk perception. But really, the big risk in the Middle East wasn't that Israel would hit Iran, is that Iran would start a nuclear war. So we're seeing, gold is up, and it has already been going up for some of the other reasons, and oil's up, but, oil's up a lot less than it could be, given that we have essentially a war going on right now in the Middle East between two major powers. But that's what the trade is going to be about. I mean, before that, the trade was, hey, the president seems to have been making deals with these other countries. We came to a very kind of pro-growth resolution. The president has always had two sets of advisors. One set says, we basically want to change our relationship with the whole world. We're going to have a trade war with the whole world, even our allies. Another group said, we need to focus this. And our goal is not to have a trade war. Our goal is to use this as a tactic to open markets up. The rhetoric from the president for weeks now has been open up markets. So let's use these as negotiating tools to say to China, open up. It'll be good for you. It'll be good for us. So markets were loving that. And I think they were right to love that. So that's been kind of the major story. The Fed has not been the story that much. Yeah. And frankly, I'm glad for that. I would rather markets trade on whether we have pro or anti-growth policies rather than trade on whether we can get the central bank to goose the markets. So I'm pretty happy with where things are going. Obviously, we want to pray for a good resolution to the war, but so far, I think things are looking pretty good for the American economy. We're going to get a little slowdown, but I think things are generally looking pretty good.
We'll take it. That's well said, Jerry. Thanks for that update. Walker, Jerry, so thankful for you gentlemen and all the incredible work you're doing. Thanks for being with us today.
Thank you.
All right. Well, that's Jerry Boyer, Walker Wildman. I'm Rob West. On behalf of Pat Montague, Devin Patrick, and Jim Henry, and everybody here at Faith By, thanks for joining us. Happy Father's Day. We'll see you next week. Bye-bye.
The views and